If your chart is looking like this, it's like a 5-year-old trying to impress their parents for the first time. I mean, I don't even know how people can trade like this. There is like MACD, RSI, market high, market lows, like all these different indicators, and I don't even use indicators. So you know what? Let's do this. Whoa, much better. Come for the trading, but stay for the fun. My name is Future Orbits, and today we're gonna dive into the world of Forex. And I will teach you exactly what you need to know about the basics within Forex, so you understand like how can you take a trade, and you might consider joining our VIP so you can learn how to take trades as well. It's completely free and it's up to you if you want to join. But in order for you to understand how Forex works, we need to understand how things like market structure works, right? So I've made a formula called MAP, stands for market structure, area of interest, potential entries and exits. But before we get to that formula, then please check out the links in the description down below where you can get free Forex sessions and free binary sessions, okay? It's completely free. You don't have to do anything else than just connecting your ID to my broker. That's all there is to it. And it's not even my broker, right? It's and it's totally free. So yeah, I do live sessions Monday to Thursday from 6:30 to 9:30 a.m. EST. So you're welcome to join, okay? But let's get into this video. Market structure is defined by 3 different key points: uptrend, downtrend, and range/consolidation. A downtrend is when the market is, funny enough, going up. No, it's when the market goes down. All right, so you see here, market starts here. It doesn't start there, but we're taking it from this point here, right here, and it's going down here, and a little bit up, and then down again, and a little bit up, and then down again, but mostly it's going down. We call these lower lows and lower highs, all right? LL for loser, nope, for lower low, LH for lower high. All right, so lower lows, lower highs, lower lows, lower highs. Every time you see the market going a little bit up in a downtrend, it will be a lower high. Every time you see the market going a little bit down, it will be a lower low. When it ends and starts to come up again, then you will see, and you can call this lower highs or lower lows, right? And we have them all the way down here. We have lower high here, we have a lower low here, and in between these lower highs and lower lows, we will also see something that we call a range. We will also have lower highs and lower lows and higher lows and higher highs within a range, right? But this here is more like a range/consolidation, because market is not going up or down. I mean, yes, here it went up for a day here, and it went down for a day, and it went up for a day, and then it went down for a day, and then it came a little bit back, and a lot of things is happening here. And of course we have a lot of lower highs and lower lows within here as well. But here the market is not really moving, right? So this is why we call this a range. So here, downtrend, a little bit of uptrend, and then a downtrend, and this is range. Let's imagine that this was an uptrend. Now this would be then higher lows and higher highs, right? Because market is going a little bit down, ends here, and comes up again and create a higher high. Higher high, higher high, higher high, higher! Higher high. Hello, hello. So you get the point, right? Downtrend, lower highs, lower lows. Uptrend, higher lows, higher highs. And then in the middle, range, where nothing is happening. Range, range, range. Something like that, right? So you get the 3 different definitions. And now we need to understand, where can we find an area of interest? Great! Area of interest. So now we understand that EUR/USD is in a downtrend. Actually, EUR/USD came a little bit up here, but we are still looking in a downtrend, because these highs here did not take out this previous high here, which also is a supply zone. And down here where we had the lowest low, that is a demand zone. And I don't want people to draw it like with this line here, because I see people do this all the time. Actually, when you want to draw a supply and demand zone, then please use a bigger area, right? This will be the bigger area. So this would be our demand zone, and up here this would be our supply zone. And why is that? Well, it's because the market meets itself multiple times, and you break some higher highs and you break some lower lows, and you have a break of structure. But I don't want to get into technical stuff here. I will just tell you that this down here is a zone that we call a demand zone, and this up here is a zone that we call supply zone. And what's interesting about supply and demand is that when market meets itself multiple times, you will often see that market is gonna pull back. It's gonna simply pull back and retrace to the opposite side. So when price came up here into this zone, what happened? Well, it went down again, because now we want to come down into this zone that is now the new demand zone. This was the demand zone before, but this is the bigger demand zone, right? Like, price can still come down here, but you will most likely see that price will stop here for a second and then come further up. So how do we define that area of interest? Because there's so much going on here, right? We have higher highs, higher lows, higher highs, higher lows, and lower highs, lower lows, and we have a demand zone, and we have a supply zone, and we have now a new demand zone. Like, what is going on here? Well, it will be much easier when you just understand the trend. Then after that, zoom in. Simply zoom in, okay? So now we go to the 4-hour chart. We still know that we are in a downtrend, so that's why we are looking for multiple sells versus buys, right? Because if you're looking for buys right now, when we're in a downtrend, you will most likely see price going down, and that will be a contradiction, and that will not be good to trade against the trend. So we will always try to follow the trend, right? Follow the trend when you are in a downtrend, follow the trend if you're in an uptrend, unless you're in a range. So now we're a little bit closer, and now it's not so confusing anymore, right? Because now we have this supply zone, we have this demand zone, and now we're just trading through here. Okay, so we know that price can come up here, and it will probably most likely stop somewhere here, right? And then it will come down here, and it will most likely stop somewhere here. Like, you can see here, you can see here, you can see here. So what would be the next move for Euro USD? Possibly it will come up. Of course, it could come even further down, break this demand zone and come further down. But for this strategy here, we will take this as the supply zone and this as the demand zone, and we will trade between here. So right now I will zoom even further in. Now we have the 1-hour chart. You see now the supply zone is all the way up here, and we can actually create a new supply zone, right? We can go up here and see where does market meet itself again. Well, there is something here, and there is something here, right? Here the market hits the line here, it also hit the line here, it hits here, it hits here, and down here it hits here, it hits here, it hits here, 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 here. So those would be where we would target our next trade. So we call this area here an area of interest. There is a certain value within this area that we want to trade between these supply and demand zones, also called support and resistance zones. So the resistance is here, the support is here. So what will I do? I will zoom further in on the 30 minutes, and now I see that there is a lot of bearish momentum going on here, right? This is like a downtrend, small downtrend, and I can see, wow, something is happening within the market. The market left a giant gap here. This is called an engulfing candle, and we had an imbalance here where price made a giant gap, also called a fair value gap. All right, so this is called a fair value gap, FVG for fair value gap. So that means when price comes up into this imbalance, instead of it taking a pullback from this resistance zone, it will most likely stop here for some time before going up here, or it might even come back again. And that's why I also want to pay attention to this zone here, this area. And if you look at the 4 hour, you can also see that this fair value gap is actually quite the same as this fair value gap, just a little bit wider, right? And on the 1 hour, almost the same thing. I will go for the 30 minutes because I like to trade on the 4 hour, 1 hour, and the 30 minutes. And I will wait for price to come up into this fair value gap and see if it respects this fair value gap and start to come down again. And if price comes down below this area of interest, I will take a sell. Because why? We would like to sell when market is going down. We would like to buy when market is going up. So buy when uptrend, sell when downtrend. All right. So on Monday, because now it's Friday, the market is closed. On Monday, if price comes up here, fill this gap. That means if price comes up and take out this gap here, then if it stops here or stops here and slowly comes down here again, and I see at least 3, 4, 15-minute candles respecting this area, and we come down and take out this area here, then I would do a sell. So now we would like to see where can we take a potential trade and where can we potentially exit that trade. So let's say on Monday, market comes up here, enter this fair value gap, respects this fair value gap. It doesn't go up here, doesn't go up to the previous resistance, but it stays within this fair value gap and then slowly comes down again because we are in a downtrend and the market will most likely respect this area here. You can also see here, there is a lot of resistance going on here as well in the market, right? You can see here, price meets here, 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 multiple times. So I could see that price will respect this area and come down. So I will mostly likely take a trade here. So when price starts to come up here and respect my level and starts to go down here and we see, okay, it's coming down, then I would enter when it breaks the fair value gap to the downside again. And I will put my short position with stop loss just above the fair value gap, take it down to the demand zone, and then possibly a little bit lower because it's a downtrend, so market will probably make a lower low. This is just speculation, we don't know that, but if price respects the fair value gap, I will put the stop loss a little bit above the fair value gap and I will take this trade. So it would look something like this. Da-da, 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 da-da. Maybe even this, and then up, and then boom. Doesn't matter if it goes up here, as long as it respects the fair value gap and stays within this area here, then it should be good. Okay, so that's how I would take a trade. So my potential entry would be here, and my potential exit would be down here. And how do we make sure that we have the proper entries? How does TP works and stop loss and all that? Well, SL stands for stop loss. TP stands for take profit. So this is the stop loss. When price hits here, that means I will lose the trade. I will most likely not lose the trade unless that market actually breaks this fair value gap. And then I will simply take it down and see, okay, where is another support, something about here, right? So I would take my TP and put it a little bit before that support, because price will not always come down. Price can also stop and just come down here and then come back up again. So I'll put my TP1 here, and I'll put my TP2 down here at the bottom, and then I will take a TP3 based off previous lows. So if I go here, I can see that down here we have the end of this demand zone here. So most likely it won't happen, but I'm still gonna put my TP3 here, because why would you jump out of a trade if you're still in profit and you just move your stop loss accordingly? So what do I mean by that? Well, you can move your stop loss. In your broker, there will be something called modify, or there will be something called, change your stop loss, or you can even click on the broker and just move the stop loss, right? So I would be moving my stop loss if we hit TP1 to about here and a little bit lower, because there is something called spread, and spread needs to be paid. So I would move it to about here, which means if price comes down to my TP1 here, like that, and then bounce back up here and hit here, then I haven't lost anything. I have won the first trade here. I have taken partial profits, and then it can just go down. For my sake, it can stop and come back up to stop loss. I don't really care. Or it can continue down. Some people don't use stop losses. Some people use the stop losses. Personally, I don't use stop losses so much, but for people in my community, for people in my VIP, we do stop losses so that people can know that their money are safe, right? So if we come down and hit TP1, boom, partial profits. Let's say it continues down, boom, hits TP2 right here. Then we can take some more profits, and now either you can move the stop loss a little bit more, or you can simply let the trade run and see how it goes and move your stop loss accordingly. But you can also just let it be, because of course chances are if you come down here, create a lower low, that we'll have a pullback and come back up here to this area here, right, again. So of course price could come up here and take out this if you're moving, your stop loss accordingly. So this is just very simply to make you guys understand that trading is not that difficult. Of course, we haven't seen how this will turn out, and of course I can be wrong, and the trade could potentially just continue up here, but I will not lose this trade, because I'm not gonna enter if I don't have confirmation that price is gonna stop in the fair value gap and come back down. If price just continues up here, I will not enter. I will wait until we take out these highs. So let's move all this. If price continues up, take out my fair value gap and just continue and doesn't respect price. It most likely will, because we're in a downtrend and there is a very, very good area here in this fair value gap. Then price would come all the way up and contest these highs here, which will be our resistance and also our supply zone, right? It's a little supply zone, but it is a supply zone, right? So price will react somewhere up here. And when I get enough confirmation that now price is going down, we'll simply take a trade up here, right? Put a short here, short a little bit above highest wicks, and take it down again. It doesn't have to be complicated, guys. It doesn't have to be extremely difficult and hard to explain. Forex is not easy now, but it's not hard either. You just simply have to do proper risk management and have enough confirmation to get your trades so you can get enough profit. All right. So what is the secret strategy? What is the secret formula to always win some kind of trades like this? Well, if you join my freedom group, my community, I will teach you much more about Forex, and I have a strategy that makes it possible to always be sure that you will not lose your money when it comes to something like this. Okay, we only have to hit TP1. That's all there is to it. So yeah, I would like to welcome you into the Freedom Group, and thank you so much for watching this video. Hopefully I will see a lot of you, and if you have questions, please leave them in the comment section down below. You can also reach out to me on Telegram. Please check me out and follow me on the different social medias, and as always, thank you for watching and happy trading out there.